I want to jump straight into our discussion here, and the fact that your call, your non-consensus call at the beginning of the year,
very clearly, yes.
you remember very clearly, was to be underweight Sasol. Now, I like it when people, yes, exactly, and I like it when people move out of the herd, because we know that every fund manager in South Africa has significant exposure to Sasol. So first of all, the rationale for your call at the beginning of this year.
Look, we had two. Number one, if it's macro, we had the view that obviously global GDP would come under pressure, as it has, and obviously oil is very correlated with global GDP, and there was a premium in place for Iran. We believed that that was probably excessive, and the rationality of the market would eventually come through, the oil price would come off, and that would obviously then impact the oil and gas sector, which it did on Sasol. Secondly, our analyst Lee Bregman had a negative view on Sasol for operational reasons as well. So it was one of those great cases where macro and micro actually meet, and obviously that's where we had our view. In our model, portfolio has been the best performer. It's provided the most alpha. Unfortunately, there's been things that haven't provided alpha. So you never win everything.
Win some here, lose some there at the end of the day. Vikas, I know you are wanting to get in on this conversation.
Yes, I think that it's a very interesting place to be, the whole energy sector, because the one thing in the energy sector that really interests me is actually the whole fracking thing.
Yep.
Because my experience over time is the world doesn't become like South Africa. South Africa becomes like the world. If the world is fracking, we'll frack soon enough. What's that going to do to our oil industry or our whole energy sector?
I think it's a global call. I mean, you've got fracking, you've got gas in the US. You could argue that the US's energy security will be materially altered, and the whole geopolitical environment would change, because simply put, they perhaps wouldn't be as worried what happens in the Middle East as they are now. So I think for the US, that's absolutely crucial to them. We probably don't have the same politically overriding factors at play. We can take advantage of someone else in this particular instance.
Indeed, but doesn't it actually give us a chance to become much more energy independent than we've been? I mean, we've really been, whenever energy prices go up internationally, we've been at the short end of the stick. Is this large enough to actually change that material for us?
I think at the moment it's a complete unknown. The whole Karoo, the whole fracking, the whole gas. The environment is such that nobody knows how big that absolutely is. So it could be huge, but clearly there are huge environmental concerns. So this is not an easy process. Fracking absorbs an incredible amount of water, and the jury's out, but it appears to be very bad for the water resources, and we actually are a country that is actually water poor. So perhaps the same kind of driving factors aren't at play as somewhere in the US from both of those factors.
A couple of the fund managers who are well steeped in Sasol profess that the international community hasn't cottoned on to the Sasol story, and that when they do, that's going to create the re-rating on the stock. How do you react to that?
Well, I mean, part of the issue that concerns us is that for Sasol to make money, there's a spread on their gas to liquids, their blue sky. It's really the spread between gas prices and crude prices, effectively. You use gas to convert it to crude, effectively. And the spread between those two prices are at absolute heights, i.e. gas is very cheap relative to crude. If it normalizes, you could find that the margins for Sasol are a lot weaker than they are envisaged to be right now.
On the other hand, if you believe that fracking will continue and that we will also frack and that gas is going to be, there's going to be a lot more gas around, the guys with the ability to turn that gas into liquids are really going to be the beneficiaries.
But isn't that still blue sky? Isn't that still blue sky?
Well, the prices are, the price of gas and the price of oil is reflecting it. So
you own Sasol. You're one of those people that's steeped in the stock, aren't you?
I love it.
I see. We must make sure we get disclosure at the top of these discussions.
Exactly.
So of course, I've got to ask you the proverbial question. The question I ask everybody who holds a stock in bucket loads is why you want to be exposed to the volatility in the dollar rand and the oil price, two biggest external elements impacting Sasol's earnings, and you've got no control over them.
The main reason why I want to own Sasol is exactly because of the fact that oil is becoming scarce and coal and gas, which is what they make petrol from, is becoming more and more plentiful. So that gap between I'm going to continue to supply petrol, my cost to supply petrol is going to stay the same while everybody else's cost to use oil are going to go through the roof. So Sasol is going to make a massive margin on their petrol sales.
On the assumption that they can, on the assumption that they are able to convert that. And remember, their history is coal to liquids. It's not gas to liquids. Yes. So you're betting that they are going to be as efficient, if not more so, than the global competition.
My view is, first of all, that coal to liquid will still be very important because coal is actually plentiful globally, whereas oil is not. So the coal thing is important. But the other thing is, if you go from coal to liquid, you actually go coal, gas, liquid. So the people in the world with the most experience from gas to liquid is Sasol, by far.
I'm just going to sit back and watch.
So
Vaughan, the right to respond.
Strategically,
you know,
I
like
think
one of those ring fighters.
You've got to go own the stock because I think it's in a unique position in the global energy industry because of its ability to actually turn other stuff than oil into liquid fuel.
And you think the oil price is going to go up in the next year?
Yep.
Even though
in the next year, that's a short-term view on
it's
oil.
A fairly short-term view, but I think that essentially we are actually approaching the point where all the cheap sources of oil are known to us and are running out. So I think that over basically any period you can look forward to, the oil price is going to be high. That doesn't mean that the energy prices need to be high because we've got plentiful gas, we've got plentiful coal, but oil specifically is going to become very scarce, I believe.
Vaughan, your call's worked for you to this point.
So far. I mean, I guess the bottom line is that, you know, what
a little bit of anger. Yeah. Let's review in 6 months' time. We'll put you both in the ring again.
I just think that strategically, it's a little bit like Richmond's. Never get caught without your sausage.
All right. Now, let's go on to another call. Underweight. You were overweight construction and healthcare stocks at the beginning of this year. Now, Stefanuti came out with results yesterday, and there's no good news on the horizon on that front. I have this debate extensively with Hlelo Giyose from First Avenue Investment, who's also been early into the construction story. Where are we going with this one? And are you holding on?
I am. If we were interviewed 2 weeks ago, we'd have looked a lot smarter than we do right now. I mean, you know, construction's only up about 10–11% at the moment.
It's not bad. Listen, given a low yield environment, nothing to sneeze at.
It's still outperforming, so that's the bottom line. I mean, the issue is obviously the Sanral issue hurt most of the construction stocks. But the reality of the matter is for someone like Robex, which is sort of a road builder, 40% exposed to Sanral, according to our analyst, but only sort of 25% of that 40% is directly on tolls. The rest of it is other road business that they actually undertake. So we haven't changed our investment thesis that infrastructure is something that's critical to this country. I mean, I was out of town for a week or two, and as soon as you go out of the N1, N3 corridors, the roads are in an appalling state. And we know the infrastructure is out there, 850 billion rand that needs to be spent. It's a case of when, and the problem with these kind of stocks is that they tend to discount ahead of the earnings. So you might wait, but as we saw in the first sort of 3 months of the year, they gap up by 25% before you can blink. And that's the issue that we want to take into account. We're saying that there is a long run positive underlying cyclical trend for those stocks. So get in now, and it's not going to be a happy ride.
How much has your call got to do with the fact that ultimately government has to deploy that 800 billion?
It's a very large part of that call. They have to, our infrastructure is running down. At some point, we're going to have to spend. Whether it's this year, whether it's the end of next year, we are going to spend. And if they don't spend, we'll pay for it.
But I think that I agree. I think that there's even the Sanral thing might not be so bad for the road builders because the roads that Sanral's supposed to build has been built.
Agreed.
So if we actually spend more money in other places apart from Sanral on roads, that's actually where it needs to be spent. So if we find another source of income for road building, that would actually, because we now need to, because we can't, a lot of the roads outside the Sanral thing are not tollable roads, if you like. So if we actually find a different source of funding for road building, that would be very good for the road builders, because Sanral has built the roads they need to build.
So let's look at a couple of the stocks that you're exposed to in the industry. What is your top play in the construction space?
I mean, currently we still depend on our analyst, and he still prefers the more defensive play, and fair play to him, it's actually been a good call. You know, Avenge, those kind of defensive players. Murray's, there's still a number of issues around it. We've had the rights issue. I think it is going to be good, but you can afford to wait. Particularly now that you've had a slight pullback in those stocks. But you know, our call is primarily sector. So we would literally buy the sector and we would retain exposure to that.
Yeah, we don't really have a lot of research on the individual stocks, so we would also make a sector call. And typically what we would do is we would actually rebalance. So if a sector like, for instance, banking has done really well and another sector has been weak, we'd just take some money out of the well-performing sector and put it into the... So we'd be selling some banking shares and we'd be buying some construction
You are
shares.
buying construction as we speak.
We're rotating away from the financials and into the construction stocks.
Overweight healthcare stocks.
Yep.
That's working for you.
It's actually working better than construction at the moment, although you would have changed that sort of 2 weeks ago. Again, that's a secular story. We think NHI is going to come. Minister Gordon announced in the budget speech in 2 years' time he's got to come up with 6 billion rand to actually start putting into the NHI. We've got R1 billion the next couple of years. You know, we know they're aiming at 250 billion rand on top of the 110 billion we spent on healthcare every year. That's a very big number. Your real risk is that government crowds you out and does everything themselves. We would like to think that that's not going to happen, that they're going to have to come to the party with the private sector and go. And it's going to be like, you know, I used to be a telco analyst 15 years ago. They only went one way. You had little hiccups along the way. They only go one way. We see the same kind of thing for healthcare.
Public-private partnerships are the way of the future. How are you feeling? Are you
warm
on the
We don't
healthcare?
really like the healthcare thing so much. So we've got a structural underweight to the healthcare
Why?
thing. Just because of the government involvement. We don't like things where the government's involved because you never know what they do next. So we like to work in sectors where the government doesn't participate.
Is regulation a concern for you?
Absolutely, absolutely. I mean, that is a very valid point.
That could be the Achilles heel of the industry.
Agreed. You know, you looked at single exit pricing for sort of clicks, whereby the margins were sort of regulated down, but then part 2 came out and the margins were acceptable. So we like to believe that government will be rational. You know, you can't do everything by yourselves, and eventually that they will come to the party. But it doesn't mean it'll be without hiccups.
Like I said, we're not saying that there won't be profit to be made. We just don't. We just think the risk is higher than it is in other places. So we'd rather have an underexposure to that.
So where are we exposed in healthcare?
Again, you know,
It's a sectoral call.
It's a sectoral call. Interestingly enough, our analyst likes life healthcare. One would have thought that maybe after the 50% it did last year, it wouldn't have done so well. I think it's up 25% year to date already. So life healthcare continues. You know, the quality stocks continue, but Netcare, you know, Mediclinic, you're exposed to the sector.